Let me charge this real quick. There you go. Sorry about that, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks again for joining me today, every day in the morning, 9 a.m. Eastern Standard Time, and for the afternoon aftermarket recap, at 5 p.m. Bottom right-hand corner of your screen, white logo. Click on that, turn on notifications, subscribe to our channel. Make sure you hit that thumbs up if you like these videos. Again, appreciate it. As always, let's get to work. All right, Dow futures down 178 points. NASDAQ down about 196. S&P futures down about 1%. Russell down about 0.78%. Crude oil is flat, 110.42 a barrel. Gasoline continuing to slide, $3.60, down 2.15%. Gold is up 0.61%. Silver, 1.18%. I do have some silver calls. Euro dollar, 107.05, up 14 pips. Dollar again is down 70 pips, 127.20. Bitcoin is bouncing back slightly, 29,205. Ethereum hovering at that 2,000 level. This is futures, 1959. 10-year yields creeping back down a little bit. We talked about bonds yesterday, if you guys remember, the reverse repo and the demand for short-dated securities. I expect yields to continue to fall. We'll go over that chart here in a second. The dollar index, another chart I want to watch today, pretty much flat, 102 even, down about 0.07%, and the VIX up 2.5%, 29.21. You already know what chart I'm always looking at, guys, right? ES, good old SPOOs, S&P futures. Okay, couple yellow lines. We know we've been talking about these levels for a little bit. You're probably thinking to yourself, oh, Carlos, man, we're down 1% of the day. Are we screwed? Well, we're pretty much in between range of 39.05 support, which was that gap fill, which we have not filled as of yet. Not completely. Pretty close. Pretty close yesterday in the morning, but we did not fill. Now we have an upside gap at 39.71. So what do we do when we have our gaps? Guys, we make sure to draw our lines. Very important to have your lines set up. If you're watching this and you are a TOS fan, this is Think or Swim. You're gonna go to drawings, drawing tools. You click on that line. You just right click. You can go edit properties. Put a line, you could put dotted lines if you like. You can put regular lines if you like. If you want to see the dotted lines, you go to OK. That's how it looks. I don't like it. I like that big highlighter and in 5 width. And then you can always move it around if needed. So again, that's pretty easy to do. Let me see. I thought I had it. So funny. Activate drawing. There you go. So you can activate it. You can start moving it around how you want. Again, a couple of tips there to help you on your trading journey on TOS. And of course, you can always redraw as a channel. You can draw one line, extend it, yada, yada, yada. But if you just do this, it's a lot easier. So we'll draw this, whatever. We'll remove drawing. We'll try it again. Again, this is just for our gap fills. We're not doing anything special, but make sure to get that screen time. Extremely important. If you don't have much to do throughout your day and you just want to research some stocks, start doing some gaps. You can start with the Dow 30 stocks. Just Google Dow 30. Look at those 30 stocks. They're the largest mega cap names. One of the the bigger names. Your Apple's, United Health, Goldman Sachs, Merck, Home Depot's in it. Those names. Those are important to chart as much as you can. Of course, getting that experience in your arsenal. So back to S&P futures, bouncing off the 50-day. Not this move. All of this here was due to that snap guidance. Again, it's hurting the Nasdaq. Now you're probably asking, what does Snapchat have to do with the S&P? It's probably not that large weighted. Well, the problem is that it's dragging the actual. You can see here the actual sector, communication services, Google. Again, this is online ad revenue, 4.29%. Facebook down 8% this morning. How about Twitter down 3.22%? Match, I don't think that's a big deal. Disney down 1.64%. Netflix, again, anything ad-based is going to take a hit with that Snapchat warning on guidance. Amazon down 2.33%. Tesla down 3%. Tesla's down on a downgrade today. I retweeted that on Twitter. Nvidia's down. The semiconductors are down as well. Apple's down. Microsoft is down. But yeah, you could see really concentrated to more of the mega cap tech on that warning. Again, a lot of these companies do take money or make revenue from ad guidance, ad services, excuse me. So again, extremely key. So S&P futures, nothing to be really worried about. Really have two scenarios here. You really have which gap is going to fill first. Are we going to fill this upside gap of 39.72, or we're going to fill this 39.05 gap? So either way, just be ready and don't be surprised. Let's go to VIX. Now the VIX, I did just fill this highlighted gap. So we'll go ahead and extend to the right. And again, that's at, again, this is just an index, not tradable. So again, use technical analysis at your own leisure. Doesn't always work, but the gaps have filled. So again, 28.49, I expect that to fill as well. Let's go to 10-year yields, and then I'm gonna go to the dollar, keep it at macro today. Again, downward channel on the 10-year. You could see it here. Again, just gaps and gaps and gaps. As we know, it's not a tradable index, but again, mind this downward channel. Lower rates are coming. 25.75, which would be 2.575%, would probably be the next lower target as long as we stay within range. And the dollar index here. Dollar index, again, we talked about this head and shoulder pattern breaking down. 102, 101.62 is still holding up. That's going to be a very positive economic backdrop for these large cap companies. Granted, Snap weighs a little more, but again, if we can get the dollar to come back down to around 101.62, possibly break that, you have another support right around 101 even. Get around there. That should be worth a couple of handles on the S&P for more upside, possibly to 4,000. That's just really key levels to watch. I talked about that yesterday on S&P. Again, we want to get to 40, break above, hopefully, and we can see where we go from there. Let's answer some questions. Where do you think MRO can go in the next few months? This is an oil company. So again, oil is not a bad idea to play here, obviously, as oil is getting stronger. I think MRO still definitely has some upside. We'll go ahead and expand the view here. And you could start seeing that this is on a multi-week chart, and we still have a little more to go. Again, before we start getting resistance, $40 seems to be about right. You can go long MRO here. Again, if you want to put a stop in terms of your trade, you could put it at 20 bucks. So again, if you wanted to just do that, but again, oil still chugging along strong. That's exactly what's going to go by. Kind of similar, right? Almost a double top in a sense. So again, we go to the daily on crude. Kind of stuck within a range. I thought we'll break 115.05, but with a weaker dollar, we might get that little ignition pop higher to 115. Energy companies become very, very interesting. I was just waiting for energy companies to kind of pull back a little bit. Maybe oil gets back a little bit. But look at this, XOM. Right now, again, 52-week highs yesterday. So ExxonMobil, remember when this stock was around 52 bucks? I mean, it was actually lower for a while. Remember when oil became negative? It was a $35 stock. Now we're near 94. Patience does pay. Sergio says, good morning. What are you expecting from FOMC minutes tomorrow? I think they're going to talk about the same thing. They're going to talk about 50 basis points seems to be prudent for rate hikes. And pretty much the next two meetings are set. The question is, where do they see rates continuing forward? Do they see more of the prism of we're going to kill consumer demand, or we're just going to hit inflation with 50-point rate hikes, see where the data goes? So it really depends on what Fed we're getting. The meeting minutes are just the FOMC notes, let's just say the conference notes. Let's see if they talk about killing consumer consumption. That's key. I want to see what their strategy is in regards to unwinding that balance sheet, all that MBS, all those treasuries. And the last one is that, are they going to be data dependent? Are they going to just, automatically raising 50 every single meeting? Is it a live meeting? Live meetings mean, it's all about the data. Maybe some oil calls mid-July. Yeah, you're thinking about the summer driving season. Again, I'm not against it, but with crude oil, we need to get above 115 before I do any kind of oil plays. It seems to be rejecting there. We talked about the daily. And again, kind of a nice little trend line. Not perfect, but again, you could see it. So we are in an uptrend, obviously. But 115 seems to be that double top. We should break it, but I'd rather wait to confirm that. Maybe the oil embargo in regards to the EU, maybe that ends or something like that. Some kind of agreement comes, oil would pull back pretty quickly if that was the case. Thoughts on OKTA? I don't know much about this company. Okta. Let's go ahead and bring up Yahoo Finance or Google Finance, excuse me. Go ahead and read some numbers quickly on them. No PE ratio, so that tells me they're not profitable. Not the best, obviously, especially in this market. Non-profitable, you're not going to get a lot of bids on that. Revenue's up 63% year over year. Okay, that's good, but it's a new company. Obviously, I'm assuming this is an IPO of some kind or came recently. American Identity and Access Management based in San Francisco provides cloud software. Now, the problem is cloud is extremely crowded. I've gotten that question before. Do you like Salesforce.com? Do you like Oracle? Do you like this? Do you like that? I think with cloud, you got to stick with two. Amazon with AWS and Microsoft. I like CRM as third. I think Snowflake is too expensive in this environment. So I think Microsoft would be the best of the breed. I wish Amazon would spin off AWS because they're very valuable, but you're sticking with Amazon being with the logistics and the consumer discretionary or consumer staple warehouse, whatever. So that's the problem with AWS. Again, it's lumped into this company that has so much expenses, it's so large, and the margins are getting smaller and smaller. How long can AWS carry Amazon is the question, and it's expensive. So Amazon may not be the best way to play cloud at this juncture, just due to valuation, same as Snowflake, same as CRM. Let me go ahead and give you an example here on FinViz. We're going to go to forward PE multiple. Now, again, we can always go by regular PE, but we'll go to forward PE and we'll understand that their guidance is okay, or the guidance is what they say, without any guidance cuts. You're talking about a 40 PE for Amazon, and at Amazon's trading at 24. That's almost double what you're paying. And Microsoft is a very stable, amazing company, best credit rating, AAA. I mean, balance sheet is absolutely solid. A fortress of a company, Satya Nadella, is amazing. I think Microsoft's a better buy. But look at cloud, guys. CRM is cheaper than Amazon, sure. Again, so much competition in terms of information tech, software, anything cloud related. It's just too jumbled. And usually when you have overcrowding in a space, especially where stocks are coming down and multiples are so important in a high rising rate environment, you're not going to go for those high multiples. You're going to go for the tried and true. You're going to go for, the ones that have consistent gains, consistent revenue, consistent EPS growth. Microsoft fits that bill. The only issue with Microsoft is it too expensive in this juncture? In a bull market, it's very cheap. Again, if you're using PEG ratios, price to earnings growth, sure. But again, you can have a great stock, just like you can have a great car, but the value can still go down based on the perception of what it's worth to others. Now, the question being, if Microsoft is so great, right? And again, I don't like Okta, by the way. Let me go back to that. Let me go back to that chart. Again, another high flyer, and look where it's been. It was at 294, now to 83. Again, broken many levels of support. I mean, just negative. I mean, it's tough. They did have a profitable quarter back in November. Now it's back to negative EPS. Not the best. Listen, these kind of names, do you want to kind of bottom fish here? I would wait for a meaningful bounce. I would say get above 142 on Okta. Give yourself, that's fine if you miss out on $60. At least you're confirming at least a move to the upside. Last thing I want you guys is just to buy and then it's going to keep going down. Now, again, if you're a long-term investor and you're just DCAing, dollar cost averaging, or you're just trying to find some stuff in your port, you can just wait a little bit, see if the valuations do come down, at least on the broader market, and you're going to go and revisit Okta later. But would I buy here? No, I would not. Valuations are just too expensive for this company. There's no valuation. The valuation or the PE ratio, there is none because Okta is not profitable. And that's not the best kind or the most appealing stocks in this market, especially with higher rates. Guys, remember, your capital is more important now because it's more scarce as dollar liquidity or availability becomes more scarce. There's not enough left. There's not going to be as much around as we did when we had easier money policies. So being your dollar stronger, look at the banks are offering higher rates on your savings. CD rates are going higher. Again, you're going to want some value for the companies you're going to buy. You want either capital return or you want a shareholder-friendly board where they're going to buy back stock, show some freaking growth, and actually move on from there and continue. To take risk here, this is what the Fed is trying to do with raising rates. It kills this kind of speculation. It kills this kind of way of looking for growth names that are going to move forward or what have you. Now, again, it's all about your perception of value. I don't think Oak does great. I think Microsoft's great. Maybe you think opposite of me, but that's what makes a market. That's the beautiful thing. But I would not want to get into Okta at this point. No, I'd rather wait for a meaningful bounce or we start breaking some levels and we can start seeing that, hey, the world hasn't ended and we can continue back up. Isaac's asking, have I added any long term? I have. I still buy SpyG every week. I still buy Bitcoin every week. I still buy Ethereum every week, some other cryptos that I have. And the IRA already did this January. Have I added to my brokerage account? I have not. I have not bought anything other than SpyG, just sticking with the index, the growth index over time. Am I getting hit on it? Of course. But again, I'm just sticking with it, staying consistent. It's kind of like working out. The results come when you're consistent, always. But in terms of other names, the last company I did buy was a pharmaceutical company, and I bought some bonds. But other than that, some dividend stocks I have added. That's my dividend port I do every month. Investment Club knows. But other than that, no, I have not gone out of my way to go ahead and buy. I'm waiting for 37.50. That'll be a proper valuation for me, proper price for me, and I want to go ahead and start buying then. Alibaba, that's a name that I own in regards to Chinese stocks. Again, it's very volatile. I think the Chinese yesterday reduced rates or reduced some borrowing or kind of spurred some borrowing. So they're back and forth until China stabilizes in terms of COVID. BABA should be a beneficiary, obviously, but they get lumped in. That's the problem. So as an owner of this company, of the shares, they're extremely cheap. 123.25, and they do report this week. So let's see how they report. But 123.25, it gives me an interest in the stock where possibly we could do something, maybe add a little bit. There is a gap to fill right here at 157.74. So let's see where we go. Are we thinking we're pricing in 50 basis points? Yes, we are pricing in 100, 50, and 50. So that's already set. The only thing that's kind of giving reprieve in the market that I can see on an economic backdrop is the dollar coming down and yields coming down. So again, it's getting better, at least in terms of the macro charts, that maybe inflation could be peaking. Again, that's a big, big statement, but we just have to see. But based on the bond market, they're not pricing in hyperinflation. The dollar is not pricing in hyperinflation. VIX is not pricing in panic. It's actually been pretty quiet. A couple spikes here and there, but 30 is the new 20, I guess. In that sense, we're below 30, good sign. Once we start getting below 20, that's when you start really getting some bullish positioning and some piling into equities. But mind as well that inflows and outflows of American equities. We get those reports on Twitter that I've seen, I believe, I want to say every week. There's some inflow and outflows from the CBOE. I may have to check that. But I'll go ahead and leave it there, guys. Have a great rest of your afternoon, and your morning. I'll catch you guys later at 5 p.m. for the aftermarket recap. Again, keep an eye on ES. I will be tweeting throughout the day. Bloggers, I will see you here soon. And again, mind those gaps. Very important. Get that screen time. And have a good trading day. Cheers.